talking next about closing cost credit. So if you're buying or selling a home, working with a mortgage lender, working with a title company, working with a real estate agent, you're going to hear about closing costs. Closing costs are, pretty much a necessary part of the real estate buying and selling process. You're gonna have closing costs, and you're gonna pay some closing costs. The question becomes how much, and what kind of credit situations are out there. You have a lot of buyers today, Mike, and you can talk to this, buying with mortgages, they're putting low down payments down that need closing cost assistance. They need the seller to pay their closing cost credits in order to be able to qualify for the loan.
Right, especially a lot of the first-time home buyers, they may not have a lot of savings accumulated, so they need the help with that. One thing that I do my best to point out to all buyers too, no matter what type of loan you're doing, you're always responsible for your own closing costs unless the seller will pay them for you. There's a misconception out there that VA buyers, that are using the VA financing don't have to pay their own closing costs, but that's false. They're responsible for them as well.
In fact, the VA closing costs can be a little higher because the MI,
they have a funding fee that they charge. It gets financed in, so it's not paid out of pocket, but that is an additional cost. Right.
Yep. And ultimately, you also hear a lot of there are commercials out there from other mortgage companies that talk about how the no closing costs refinance, the no closing costs purchase. Those closing costs are getting paid one or another. There's no such thing as a free lunch. It's not as if they just vanish. There's no magical wand.
It's not charity.
Right, yeah, it's like poof, the closing costs are gone, I have a magic wand. It's not that simple.
Well, and it's my understanding too that there's still certain fees that you're paying as well, even though it's advertised otherwise, but
along with a higher interest rate.
Right.
Yeah, that's really what it boils down to. And I think that's where you have to compare apples to oranges.
Right. And most of the time, not always, but most of the time when a lender is giving you a credit to your closing costs or covering them for you, they're giving you a higher interest rate.
Yeah, there's something there that you have to.
Right. They're making the money on the back end.
There's some sort of, and obviously some other terms in there sometimes that kind of get thrown in now. I think that the important thing to understand about the credits, though, is to, like we said, to compare apples to apples. If one lender says, oh, well, you're not going to pay any down payment money, but over here you're going to have to, and here's your interest rate, how long does it take for you to lose that money back or gain that money back with a higher or lower rate, depending on, which path you're going, either lower out-of-pocket costs or, lower rate.
And I think it's important to note, too, the type of product, because that's one of the old, you got to watch out. Maybe someone does, will qualify for a conventional, but then put into an FHA product or some
Correct.
variation of that. So you've got to talk.
They look at it and say, oh well, over here if you go FHA, you don't have this, but then you don't have the closing costs. Then you got mortgage insurance, and
right,
you got this,
exactly.
you got a different kind of loan,
Yeah.
and
There's
a lot of curveballs you got to pay attention to. You got to compare product to product, rate to rate, cost to cost, and really do some math.
Yeah, there's a lot of bait and switch out there too, especially with the online lenders. They'll advertise X rate, but then if you get into it, that's on a $453,000 loan with 20% down and a 760 credit score.
Right.
If not, that's for just that segment.
Right. It's very small.
Not everybody qualifies for that. There's a lot of lenders out there too in regards to the costs that will advertise. We don't charge any origination fees, but you get an estimate and they're charging an underwriting fee or
right.
an application fee or a processing
They're just moving
fee.
the money around.
Yeah, exactly. You're just
else.
calling it something else.
Yeah, it's just like some of the large institutional hedge fund buyers right now. They don't charge any commission, but they charge a transaction fee and they charge a bunch of fees that end up adding up to about 9%. So
yes.
It's like it's not you're not really saving much. They're still charging you. They're just calling it something else. It's the same thing. It's dollars coming out of your bank account whether you look at it or not. So. Another thing about credits, and this is something that happens a lot in the transaction itself. You have the buyer under contract, they do the inspection, they don't like something, and then they want a credit from the seller. And it's common, it's commonplace. It's a lot harder as a buyer to ask for that in a market like today. And Robert, obviously, you can kind of speak to this. A lot of bidding wars, a lot of situations where the seller's in a leveraged position. The contract may not require them to give the buyer closing cost credits, yet they ask for one, and then bye-bye buyer sometimes.
Yeah, I mean, it really just depends on, every house is different. It depends on how much action you got on the house. If you have stuff waiting as a backup offer, I mean, you really want to be able to advise the seller the correct way to go with that. I say, you know, only address something if it's going to affect financing for somebody, because that's going to affect financing for
the next
this person
person
or
too.
the next person or the next person. So
Right.
it just depends.
Yeah, and I think, you know, what ends up happening is the buyers in some instances ask for credits when the contract doesn't allow them to. And that's another thing. Like if it's an as-is contract and they're saying, hey, I want credits, you could get kicked out of it. The buyer could
Reopen
say,
negotiation. didn't you?
exactly, and guess what? I could terminate you. So it's real tricky for buyers. They have to be cautious in a market like this where they do that. And a lot of instances, you know, it can get worked out and stuff ends up moving forward. But there are some situations where we've had the seller say, I'm not doing anything, and oh, by the way, they didn't have the right to ask for that. I'm going back on the market. I got a better buyer behind you. So you got to be really cautious about giving credits when, you know, in a you know, is the juice worth the squeeze? Is it worth potentially losing the house? Because you may be pushing the limits of what the contract allows. A lot of real estate agents, a lot of buyers, a lot of sellers don't read the contract. They just don't. They sign a piece of paper and oh, this is the way we've always done it. Well, that's not what that's not the intent. That's not what's supposed to happen. Just because you did it that way, it doesn't mean it's, you know, it's right, you know. So
Well, if you're financing too, there might be restrictions on the type of loan, for instance.
Yeah.
Let's say a conventional loan with less than 10% down, the max closing cost credit you can get from the seller is 3% of the purchase price. If they've already agreed to that, and then there's something you don't like from the inspection or whatever, and you want an additional credit, it's not there, you can't get it. So
we have that happen, and usually they come to the real estate agent and expect us to fix it, like it's our
Right.
fault.
Right.
You know, you ask for more credits and you can't get them because the lender can't give them to you, so we're supposed to do it? Like, no,
Exactly.
sorry, you know, we did our job, you know, I wish that you'd read your contract, but, you know, it is what it is, and it's usually the other side. It's the other party, not our customer.
Right.
You know, so, but nonetheless, the closing cost credits can be a moving target. They can be very tricky. They can also cause, like you said, Mike, there can be some truth and there can be some disclosure stuff that can sometimes, you know, if you're asking for a credit like towards the end of the process, then it messes with the truth of lending.
It could,
You
yes.
delay things. There's a lot of things to navigate. You can't just anymore. It's not as easy as saying, oh, I want a credit, throw it on the settlement statement, and then oh, we're done. Sometimes there can be wrinkles that can really screw the closing up.
Right, that and also the ones that I hate, the last minute surprises. Oh, well, you know, they agreed to a $1,000 repair credit. You know, in the lender world, repair credits are bad. You know, we generally don't allow them because then it just opens up a whole other can of worms. Well, what's the repair?
Right, what's
You know,
wrong with the house? What happened
Exactly.
between now and then? Do we need to have another appraisal? Do we need to have another
Exactly.
inspection?
Is it something that
Is there a
has to be
leak?
fixed now?
Right.
You know, who's going to fix it? Who's
Triggers
paying for it?
redisclosure.
Oh, yeah,
Exactly.
it triggers all
It's a
kinds of
mess.
challenges. So, and it's the same, you know, and then you'll also have sellers who will say, you know what, I don't really want to do credits. I'd rather fix the issue, and that can be a slippery slope too, because
it's a
sometimes they don't fix it the way the buyer wants it, or they didn't file a permit, or they did it cheap, or so there's. We always tell people, when you're going into a real estate transaction, go into it, and do what you can to separate emotion, think with logic. So separate the emotion out of it, think with logic, and be prepared for some curveballs. There's going to be some things where the other side is going to see things differently than you, and there's going to be some things that you may think sound completely logical, but in the grand scheme of a real estate transaction, just can't be plugged in the way that you want it to be plugged in as simply and as easily as you might think. Oh, well, they can just give me money. Yes, but what happens, if you do that? So, closing cost credit can certainly be, their own challenge. But another thing, and I mentioned this before, talking about you hear on the radio and see on TV the large companies that are buying homes. They'll say things like, "Oh, we're going to cover all of your closing costs. We're going to do this. We're going to do that." Well, like we talked about before, what's that going to come from? It's going to come from the price. So that's really what it's going to boil down to. And we don't charge commission, which sounds really cool, and the consumer, prompts the consumer to call to action and think, "Oh, I'm going to save all this money." But in reality, you just call it something else because they're not technically being a real estate brokerage; they're being a real estate seller and buyer. Even though they all have licenses, which is a whole other. I could do a whole show about that. But nonetheless, the key to that is really comparing apples to apples. And we've had customers bring us those offers that they've gotten from the hedge funds, and you look at them and you're like, I'll take that deal. I'll buy the house. I mean, I'll buy it right now. Like, so if you're listening to this and you want to sell your house to one of those people, bring it to me. I'll look at it. Like,
Right.
oh, so often the deal is such a good deal. It's like, why would you leave that? I mean, if you want to leave that much money on the table, I'll do some great things with it. But if you want to give it to a Wall Street hedge fund and, go for it. But the reality is, there's most of the time there's a lot of money being left on the table for convenience. And if convenience is what you want, I'll take the deal too. I mean, I look at them and I'm like, wow, so it's a 9% fee and they took 15%. I mean, they're buying this house for 75% of market value in a neighborhood where houses are selling in a month. They're going to make a killing on you, like you're giving away your equity. And so many people, I think, maybe haven't paid attention in the last 6 months or a year about how much more, maybe they looked at their value a year ago and they see the offer today and think, oh, it looks pretty good. Trome's gone up since then, so there's a lot of people out there that we've looked at that we've helped sell that ended up, if they'd have gone the other path, they'd have left a lot of money on the table.
And they use the property appraiser value.
Right. Exactly.
Oh, yeah, it's worth $200,000.
Yeah, exactly. Sure. Well, I mean, and so the reality is just do your research, get multiple options in front of you, know the path and the process. When homes are selling this fast, people pitch the convenience thing. It's not going to really be that inconvenient to put an extra 20, 30, 50, 100 grand in your pocket if it's going to take 3 weeks to sell. You really want to give away that much money for a few weeks? I mean, heck, go on vacation. Go on an all-expense, incredible vacation for the first month it's on the market. You're going to put a whole lot more money in your pocket.
And financing's moving a lot faster. I mean, there was a kind of a bottleneck there for a couple of years after all the changes in 2015, but I mean, the process has really gotten smooth. I mean, it's routine to see under 30-day closings.
Mike, you're knocking out, under 30 days, under 15 days sometimes.
Yeah,
our
our company-wide, outside of USDA loans, we're running around 26 or 27 days.
Yeah, that's awesome. So